Stock market news today, inflation lands, markets flinch. Today the market did that thing where it looks at inflation, sips its coffee and says, not terrible, but I'm still nervous. Let's break down what happened, why it matters, and what smart investors can actually do about it without panic selling their lunch money. Fresh inflation numbers hit. The PCE Price Index, the Fed's favorite gauge, rose 0.2% month-over-month in July and 2.6% year-over-year, exactly what economists expected. The core PCE, that's inflation excluding food and energy because groceries and gas love drama, ticked 0.3% on the month and 2.9% year-over-year. Translation, directionally okay but sticky under the hood. Markets initially wobbled, tech-led declines, and headlines turned to, so, will the Fed still cut rates in September? Live coverage had the Dow down around 100 points at one stage as traders digested the print and ongoing policy chatter. Think, not a meltdown, more like a collective eyebrow raise. Why the reaction? Because rate cut odds have been high going in. A print that's fine, not fantastic, keeps the door open, but it's not a victory parade. Some strategists still think cuts boost stocks, but caution the economy doesn't need big stimulus, aka, great, but don't over-caffeinate the patient. Zoom out, inflation is not reaccelerating, but core isn't gliding to 2% either. That's why futures still price high odds of a quarter-point cut next meeting, yet there's debate over whether that's wise with growth and employment still okay. If cuts arrive, it's likely a nudging toward normal rather than full-on rescue mode. Also worth noting, global desks framed today as stocks off, dollar a bit softer, rate cut hopes intact. So sentiment equals to cautious optimism with a side of volatility. Upside scenario. A September cut would ease financial conditions, helpful for rate-sensitive corners like small caps, real estate, REITs, and consumer cyclicals. Cheaper money equals lower interest expense and friendlier valuations. If inflation keeps trending sideways to down, multiples can hold, especially for quality growth with strong cash flow. Think of it as keeping the Jenga tower steady while earnings do the heavy lifting. Downside scenario. If core inflation stays sticky near tilde 3%, the Fed may cut slower than markets expect. That gap between hopes and reality can ding high-duration assets, some mega-cap tech. If cuts land into a still-hot economy, you risk overstimulus. Good for stocks near-term, but it could reignite inflation later. No one wants inflation, the sequel. Finally, data dependence means whipsaws. Next week's jobs numbers suddenly matter a lot. Here's a practical, non-panic plan. Recheck your time horizon. If you're investing for 5-10 years, a single PCE print should not reroute your entire life. Dollar cost averaging, DCA, still wins most stare-downs with volatility. Barbell the risk. Pair your growth names with quality dividends/cash flow compounders. Rate debates matter less when companies mint cash in any weather. Mind the rate sensitives. If you've ignored financials, industrials, and small caps, consider a measured allocation through broad ETFs. A gentle rate cut path and stable growth can help them catch up. Trim concentration, not conviction. If one or two tech giants run your whole portfolio, consider rebalancing. You can love the company and still take a little off the table. That's not betrayal, it's risk management. Keep an eye on the next catalysts, jobs report, ISM surveys, and the next CPI/PPI/PCE trio. The Fed is data dependent, you should be data aware, not data obsessed. PCE equals Personal Consumption Expenditures Index, the Fed's favorite inflation gauge. Core PCE means PCE minus food and energy, aka the drama-free version. Why you care? It helps set interest rate policy, which moves stock valuations, bond yields, mortgages, and your sanity. So today's verdict, inflation isn't spiking, but it's not melting away either. Markets hit pause, not panic. Your move? Stay diversified, keep a long lens, and let strategy do the heavy lifting while headlines do headline things. If this helped, tap like, subscribe for plain English market breakdowns, and drop a comment. Would you rather have a cut now or a steadier glide path? Also, if you sold your stocks because your barista said core PCE, we need to talk.